Hi everyone, and welcome to PipsMatter's Forex and commodity updates. Where we've we've been putting these workshops. Hi everyone, welcome to PipsMatter's Forex and commodity updates. Today we're going to be talking about what's happened yesterday and the last couple of days, and what we're expecting today, and we're going to go into a few trades in the financial markets, basically in forex and commodities. That's going to take just a couple of minutes. We'll make this one short. We have a workshop today at 5 p.m. British summer time. Now, there are a few big moves coming in the approaching sessions, in the coming days, and even in the coming weeks. So there is really a lot that's going to be happening, especially on Forex majors, even minors, and the commodity markets, gold, silver, oil. We'll cover all of these things slowly, but let's start this session so we don't take too much time. So we spoke about gold a lot in the last few sessions, and we even managed to grab just over 2,000 something pips in the last 2 trading days. So yeah, there was movement. Well, basically 2 days ago we went up, yesterday we went down, and then up and then down, and then today we're up again. We did send out the signal for a buy. We're expecting the move, a golden cross to occur on the gold versus the dollar. Here it is. We're waiting for these two moving averages to cross. Now, if we do break, but we're going to come into the analysis pretty soon, but I just want to point this out over here, and I'm saying if we do break this level, there is a chance we might fakely break it and come back in before making substantial moves upwards. As you can see, from this level here to this level here is 5,000 pips. You can clearly see it here on the CTrader platform. So, if you've already attended some of our workshops in the last months, or watched some of the videos we have on YouTube, well, then you would know that we are very interested in gold and specific USD pairs. We've got excellent reasons to believe that gold's demand will rise even more than it did in Q1, and that a very strong uptrend is forming. It's already being created, and it already started. As we covered this yesterday, it started right here. It started right there. 4th of January this year. That's when it started, and it's going to give us even further movement upwards. So that there is a lot of things happening. And like I said, we have excellent reasons to believe that the demand in gold is going to even rise even more than it did in Q1 of this year. Now, you need to know that Q1 of this year is just a little weaker than the strongest first quarter on record, or in general quarter on record. The last one was in 09, Q1 09, and that's when a very strong uptrend began on gold. But like I said, I'll cover this later on. Now, the second thing is, we also have very good reasons to believe that this year, 2016 and 2017, but beginning with 2016, will be very bad for the USD. Now, before we go into any analysis, I just want to update everyone on what happened with the Bank of England meeting yesterday. So, as expected, the Bank of England's policy decisions kept both the bank rate and the stock purchase assets unchanged. Basically the bank rate at 0.5 and respectively 375 billion for the purchase assets. So basically both votes were unanimous at 9-0. Now the BOE repeated that uncertainty related to a Brexit is really weighing on the economy, especially on the economic activity ahead of the referendum day. Now, this explains why it's lowered its expectations of Q2 of this year. The growth of Q2, they've actually lowered it by 0.2 quarter over quarter. We went down from 0.5 to 0.3. Now, you need to know that this may even be too optimistic, given that the UK PMIs across the board are on 3-year lows. Now, Carney was also quoted that the UK probably faces a recession in the short term in case of a Brexit. He also did decline to comment on any long-term economic impacts of a Brexit. So he did not comment on that. He did say that a recession could unfold, a short-term recession, if the UK leaves the European Union. Bank of England also repeated the message from April's meeting, which is whatever the outcome of the referendum, the MPCs will use its tools to achieve its inflation targets. Now, overall, for this meeting, to summarize it, the market reaction was pretty limited, although we saw a slightly stronger GDP. Markets are still pricing in a 36% probability of a Bank of England cut, basically a rate cut before the end of 2016. We believe that there's probably going to be a hike in 2017, quarter one, most likely February. Based on the assumption that the UK remains in the EU. If it leaves, everything changes. Now here's what we can expect for today. Focus today turns to the US in the form of retail sales figures for April and the preliminary University of Michigan consumer survey for May. Retail sales data for April will be very important, as our expectations and the Fed's expectations of a rebound in GDP growth in quarter two. Now we're coming from a weak GDP growth in the US in quarter one. So basically, there needs to be something here. They need to see something in retail sales, because the retail sales control group is expected to increase right now to 0.4 month over month, from 0.1 from March, month over month. But again, I don't like speculating on these things, because we can't really know these figures. These figures are just reported to us. We can sit there and guess and guess and guess, and we'll be right a few times and we'll be wrong more times. So let's just wait and see what happens today. U.S. consumer confidence has fallen for 4 consecutive months, according to the University of Michigan consumer survey, but it's still relatively high. Although it is natural that consumer confidence falls from previous high levels, consumers need to stay optimistic, as private consumption is the main U.S. growth driver. Now, here's something that happened yesterday, and it was pretty important. In 2 separate speeches last night, 2 voting FOMC members, the first one's George, who is hawkish, and the second one is Green, that's dovish. They both made their case for additional rate increases in the US. Now, the most interesting thing was probably the dove, Rosengreen. The comment on the markets, that the markets are pricing, basically the comment she said was, the markets remain too optimistic about fundamental strength of the US economy, and the likelihood of removing monetary accommodation is higher than is currently priced into the financial markets based on current data. So they're talking about the current data and what it shows and what it holds. I personally believe they're just trying to take the attention away from the fact that the US is going to have a very weak dollar this year. But hey, that's my personal opinion. Now, these 2 comments indicate a very high and potential high degree of consensus among the hawks and the doves in the committee in relation to further Fed hikes. Now, minutes from the 27th of April FOMC meeting are due this Wednesday, the coming Wednesday, and that's going to be really important. And just to wrap up this analysis for today, the German GDP for quarter one rose by 0.1% above expectation. It is now sitting at 0.7. That's it for that. I'm just going to go into the pairs that are in focus right now, and that's gold. We have a sort of a bullish flag pattern here. We can expect some volatility over here, But like I said, in the coming sessions, we are expecting the short-term moving average to cross with our longest-term moving average. And as we showed in the sessions, we already had some crosses. This is one of them. We obviously weren't here together to talk about this one. Then we have the second indication of a bull market. We have a third indication of a bull market. And now we're waiting for the final one. This might take some time. We need to move up. I said that in the other session, once price reaches around this level here, again, then the cross will happen. And that's when we're going to break the 1300 area. And once we break the 1300 area, we can be sure that we're going to the 1500 area. And eventually, we could even surpass the highest highs, which are around 1900s, right there. And once we do that, if that happens this year or next, well, then we're going to be expecting gold to reach new highs, which is obviously 2000 and upwards. So we're expecting a gold cross to appear sometime here, and we're also expecting a pretty strong gold market and a weak USD. Now here we go. We're going to go to the next one, which here we're also created a golden cross on Euro USD, and it's been pretty strong since December. If you guys remember that meeting the ECB had, it was right here, right, this big candle over here. That's that meeting the ECB had when everybody expected Euro USD is going down to parity. It made one of the biggest daily gains, and that's a massive daily gain. As you see here, it went all the way up by almost 400 pips in one day, and that's when we started going up. We came into January somewhere here, and then we kept going higher and higher. Right now, we're finding resistance at this channel. We can see our 55 EMA moving parallel to our trend line. And I've actually already bought this pair, not in this account, but we've already bought this pair. We've bought gold, and we've been buying gold, and we've been selling USD JPY, and we even said that in the session before. We are expecting Euro USD in the coming sessions to go higher. If you want to know how to enter these positions, how to understand them, how to exit them, how to compound them, well then you should join our sessions. Next up is USD JPY, and we've called this a while ago. We've actually given you a massive head and shoulders on this pair. We've given out a massive head and shoulders, and that was right here. And I forgot exactly when it was that we gave out the signal, but I clearly remember sending that email explaining that this is going down. And I know it's gone down by over 1,000 pips since then. So we are having an opportunity here as well. We already had a cross. This is a normal retracement, and I can see this dropping further down. Something similar to this and this happening again, and we're going down to the 100 area. We haven't been there in a while. As you can see, the 100 area has not been reached in a few years. Let's do this like this. There we go. The 100 area is right there. The last time price was at that area is 2013. It's 3 years ago. I do believe there's a change of trend. We already had indications here, very strong indications for sells, and right now our longest term moving average is catching up with this, and there was already a cross, and there might be some small resistances to go back to 110, but we're definitely going short on this in the long run. We trade on long-term activity here. We try to trade trends. We are trend lovers, and we try to make the most money possible in the market. Now, obviously, losses are a cost of doing business in the financial markets. No one can be right all the time, and believe me, nobody can make money all the time. The idea is very simple. The idea that we trend followers have is to expect and handle losses with objectivity and detachment. If you don't have losses, you're not taking risks. If you don't risk, you're not winning anything. So the idea is to take risks, but manage those risks. How do we manage our risks? Simple. We have a very strong risk management system. We have a very strong trading system. We have a very strong mental system. And most of the time we're very correct. And the final one I want to give you all today here is silver. Silver has been pretty interesting, and it's been following gold. And I'm going to show it to you right now. And we already did buy silver a couple of days ago. Here it is. We did have a small short-term golden cross. We won't see a long-term one for some time, but it looks like it could go up. Definitely, if gold's going up, you're going to see this fly up. So that's pretty much it. That's pretty much it. I have nothing else to say. Hope to see you in the session tonight, and I wish you all an excellent weekend if I don't see you. Bye for now, and visit our website now and then. It's being updated, and there's going to be some really awesome stuff there. Thank you so much. Have a great weekend.